Hello everyone, good evening all. So we are in a live session today where we would be discussing about few of the top trading strategies which we have been applying onto our trading systems and have been reaping really good amount of money. So today, since it is Sunday, we thought we will share few of the strategies what we have been trading from a good long time so that all our viewers can also be able to take benefit of those and then should be in a position to trade along with those strategies. So let's quickly see who all has joined in. So since we will also cover in this particular strategy the live Q&A sessions, and let's make this session quite interactive so that all your queries on trading or even on the options analysis can be taken up. So let's maybe quickly start the session. So it is going to be really interesting today because since this is a live session, so we will not just be showing you the old or outdated kind of trading strategies, rather the one which really works in this scenario. Now the present scenario has been quite volatile, and then the VIX has also increased and it is trading towards the range of 21 and above. So what kind of strategies that should be implemented at this stage is what we are going to discuss all about. And one thing very evidently what we want to put it across is, what if we tell you that there's a way to potentially pocket 1 lakh or more every single week from the kind of exciting world of options trading. So if you are someone who is looking for to make good amount of money in the options trading, then this is the right video for you. This video you should definitely store it in your playlists so that it will help you over a longer period of time, as well in terms of honing or improving your options trading skills. So welcome ambitious traders. So in today's power packed video we are going to unlock specific options trading strategies that we usually apply onto our trading system. And when you apply this with precision and after thorough understanding, this could definitely target or help you in making significantly weekly gains. So get ready to deep dive because we are not just talking theory here, rather we are going to lay out actionable ideas through a live session which will help you to implement this onto your daily trading scenarios and then reap benefits. So let's start one by one with all our trading strategies that we will discuss today. So we will start from the simplest of the trading strategy primarily. So this we can call it as calendar spreads. So let's begin. Now we are at 24,000 spot levels at Nifty, and today we will majorly discuss only the Nifty trading strategies. Then in the subsequent videos, if you have requirement for maybe other indices too, you can put it up your comments in the chat so that accordingly in the subsequent videos we will take it up even on the other indices. So now let's get kick started with Nifty strategies first. So we will not take 15th expiry, rather we will take the next week's expiry, that is 22nd May. So now if you look at 22nd May, so we will take strike of 23,300 on the PE levels, because we are expecting that market shouldn't fall below these levels. So we will sell PE and then quantity can be around 2,250. So let's take 2,250, and then if it requires any adjustments we will accordingly do it. And then we will take next leg, which is going to be on 29th May expiry. So since we had taken 23,300 strike, now we will take 23,400 strike again on PE. So this time around, instead of sell, we would be doing a buy, but the quantity should be almost in the range of 1/4. Okay, so this is how this strategy looks. So we have taken 23,300 put option for 22nd May expiry with 30 lots or 2,250 quantities. The price, of course, today being Sunday, so we will get to know what would be the actual price on Monday when someone wants to execute this strategy. Now, if you see the price which has closed as of Friday is roughly around 140, and then on the 29th May, 23,400 strike again, where we have taken the put option with 8 lots, roughly around 600 quantities. The price is at 224, but however this is on the buy side, so this gives us as a hedge. So now after taking this strategy, the premium that you get is 1.8 lakhs overall. So this gets added back to your margin requirement. Okay, so now what is the potential profit if we implement this strategy? So let's see. So now if I zoom out, so you see, no matter what, on the higher side we are fully covered. If Nifty goes to 28,000, 30,000, it doesn't matter to us. We are going to pocket around 1.8 lakhs, no matter on the higher side, wherever Nifty moves. On the lower side, our break even is at 23,102, which is 3.8% down from the present levels. So we have roughly around 9 days of trading that is available. So since the expiry for this is going to be 22nd May, so here if you could see the date, it says as 11 days to expiry. So that means presently you could see this is how this strategy looks. Maybe I will zoom out. Once I move towards the expiry date, which is 22nd May, this is how we are going to pocket. So what we were telling is, beyond certain level, we are going to, no matter what, get 1.8 lakhs what premium we get. So this is, on the higher side there is zero risk for us, and we would be pocketing 1.8 lakhs. On the lower end, the risk stands till 23,102. Now in case if Nifty closes on 22nd May in this range beyond 23,102 to whatever range, then we are going to get money. Now here, as we have taken this spreads for 2 weekly expiries, so if Nifty starts falling or comes towards these levels, there are high probabilities for us to get more amount of money. So now, because of the lots and the premium what we are paying. Okay, so here you could see that we will be pocketing roughly around 3.75 lakh in case if we close at this level. So now let us understand from the perspective of probability of profits. So in this particular trade, the probability of profit is 83%, which is really good. And there is no intrinsic value for which we would be waiting. Rather, the entire 1.8 lakhs what we were talking about comes from our time value of money. Okay, the funds requirement is roughly around 38.72 lakhs, which the profit on this stands at around 11%. Assume if we only pocket 1.8 lakhs, still the percentage of profit stands at around 5%, roughly around, okay, 5 to 6%, which is quite decent for just a 9 trading day session, or you can also call as 1 week, 1.5 week roughly. No matter what, still we would be in a position to get roughly around 1.8 lakhs, which is close to around 5% of the overall profit on this capital deployed. So this is one of the strategy which you all can easily implement, and this doesn't require much of the adjustments that is needed. The only adjustments that we will have to do is when markets slides down below 23,200 odd levels, because if that happens we will also have to keep some margin money, because if you see here, the from the place from where we have taken the position, if it starts falling below, then we would be in the initial stage, unrealized losses would be seen, as and when the days of expiry comes closer, that overall running loss or unrealized loss would starts depleting. So say for example, if on say Monday is going to be okay 12th May, right? So on 12th May, if Nifty comes down to 23,420, assuming, then our unrealized loss shows as 2.16 lakhs. Okay. Now, if Nifty hovers in this range and then maybe on 15th it comes at 24,000, 23,420 odd levels, then our unrealized loss only shows as 1.18 lakhs. So the maximum loss what that we could anticipate, okay, that much additional margin, it is always good to keep it in your account. So meaning to say roughly around 4 lakhs in addition of this amount should be kept in your account. So there is 1.8 lakh premium that immediately gets added to your account or positions once you take these trades, and then on top of that you will just have to keep additional 2 lakhs of margin. So once you do that, if you keep roughly around 40 to 41 lakhs in your account, then this strategy can be executed, and we can only hold as long as it keeps giving us good amount of profit. The only risk for us is going to be once it starts trading below 23,300 odd levels in the initial stage. If towards expiry that comes, then maybe still there are high probabilities for us to give profits out of this strategy, and we may not see swift movements of around 1% on the expiry day. Okay, these are just assumptions, but the given the kind of news that has broke out, that there is a ceasefire and almost end of the war between India and Pakistan. So based on this news, if we implement this strategy, then the probability of making money of around 1.8 lakhs is roughly around 83%. If Nifty maybe trades in this range from 24,000 till 23,300 odd levels, we still will have more amount of money that we will be in a position to pocket. So the max profit here shows as 3.75 lakhs, and the loss will only begin once Nifty crosses below 23,100 odd levels. So till then we would still be making good amount of money. Now if there are any queries, we will quickly take a look in the chat, since we are doing a live session. So let's quickly take a look how many people have joined, and then what are the queries or messages that people have put. So as of now, maybe nothing. We will discuss about 2 to 3 strategies and then quickly take the Q&A session in case if you have any, and then post that we will further move on to another trading strategies. So today we will plan to discuss at least 5 to 6 strategies which will help you to trade in this volatile market. Now we will quickly move on to another strategy. So this strategy maybe we can call it as, you know, straddles, but on top of that straddle we would be taking additional position. So let's quickly move on to another strategy. So we will clear the trades and then move on to another strategy. So as we were telling, so this is on top of the straddle strategy. So first we will have to move on to 15th May expiry. So why we are moving on to 15th May expiry is because there are only 4 trading sessions left, and probability of making profits in these 4 trading sessions would be much higher, given the fact that there would be low volatility or movement of Nifty that would be expected, rather than a long period where we will not have much of the control over the movement of Nifty, and there could be high probabilities that because of one-off kind of news there could be a big movement between Nifty. So it is always better to trade for the immediate expiries, provided if you see there is good returns that you are able to make out of short expiries. Else if there is no point in taking major risk here. So now let's quickly move on to the second strategy, which is first we will make straddle, and then we will add further positions, which will altogether give a typical kind of trading strategy, which almost assures certain portion of profit. And if Nifty moves above those levels, we will gain good amount. If Nifty falls below, also we would be in a position to get good returns. So now let's quickly jump on to 23,000 strike. So why 23,000 strike? Simply because we do not expect markets to fall further below to these levels. So we would be selling roughly around 1800 quantities, or we can call it as 24 lots. Okay, so this is the one leg. Now the second leg, since it is a straddle, so we will have to take second leg also as a sell position, and here we will just execute one lot. So you could see that this straddle gives around 1.85 lakh profit, provided if it comes towards the range of 23,000. So as you could see in this scenario, the expiry date, you just look at the profits at the expiry date. So at the expiry date it shows as 1.85 lakh profit at 23,000 odd levels. So the further we go, meaning to say on the higher side, the profits on the expiry date shows as reducing, right? So now in order to ensure that we pocket good amount of returns out of this strategy, and also at the same time give a good hedge both at the break even. Now if you see, the break even is 22,900 odd levels on the lower side, which is 4.6% from the current levels or current spot price, and on the higher side it is 25,465, which is 6.1. So now as we approach on the higher levels, our profit reduces. Now given that the kind of news that has broke out, the probabilities of Nifty moving on the higher side is more than it moving on the lower side. Okay, so we will also ensure that the lower side is hedged, and also once it starts moving on the higher side, we get better profits. So what we will have to do is, we will add roughly around 150 quantities of maybe 24,000 calls. So let's see how it reflects. Yeah, so now if you could see, so previously we were getting around 1.85 lakhs on the lower end at 23,000. Okay, now we are going to get roughly around 1.49 lakhs at 23,000 odd levels. But at the same time, since we anticipate that the markets from here on is expected to move higher, so that is when we are making certain adjustments here, where if Nifty moves up, we are still bound to get increased profits as the Nifty approaches at the higher levels. So assume if Nifty hovers at 24,000 levels itself, so we are bound to get 75,000 as net profit. But since the kind of news that we have seen breaking out, and which is positive because of the ceasefire, now there are no more violations that would we would expect, at least from Pakistan. So India would also not retaliate. So given that it is a kind of safe scenario, and from here on, meaning to say from Monday itself, the markets would start showing that those reversal signs and significantly move up. So in our previous market vision video, which was just released yesterday for the next week, that is Monday, we talked about the probabilities of Nifty moving swiftly beyond 24,200 odd levels to 24,500 in the initial stage. If the momentum of the buying continues in maybe one or two trading sessions, then there are higher probabilities that we might significantly cross even 24,500 odd levels and then move towards 24,800. Now, if such kind of scenario would be there, then in our previous strategy, without maybe say this buy call, so we would not make much of the profits, and this would act as a kind of losing trade. Rather, for this losing trade, we can convert this into a winning trade by just adding two lots of call options on the buy side. So and this is for the same 15th May expiry, just with two lots. If you see now, on the higher side also, if Nifty moves say 24,500 odd, we will still be making 1.11 lakhs. Instead, if we would not have taken this position, instead of 1.12 lakhs, we would only have gained say 72,000. So it is roughly around 40,000 of loss. So rather, since the probability for the next week remains Nifty to be on a bullish side, so it is better we take this position. At the same time, we are hedging ourselves on the lower side. So beyond 22,900, below 22,900, if Nifty goes, only then we will be seeing losses. Else, if in this range, throughout this range, we will be making good amount of profits. The higher it moves, the higher we will be earning as profits. So there would not be any limit to it. So that is when on the max profit also you see unlimited. So as Nifty approaches on the higher side, the better it would be for us, and we would start making more amount of money gradually. So as you could see, if it approaches even 25,700 odd levels, we will make double the amount of money compared to 24,500 odd levels. So 1,000 points, with 1,200 points, additional increment from the 24,500 odd levels, we will be getting double the profits. So this strategy will also be quite helpful for you in the present market scenario, where we have high wicks, and this also helps you in terms of pocketing 1.49 lakhs premium immediately once you execute these positions. The margin needed for this position is roughly around 32.46 lakhs, but since these are sell positions at 23,000 odd levels, so we have to ensure if market starts moving on the lower end, or would be trading negatively from the spot, then we will have to keep certain margin of amount also. So the max margin that would be required at 23,000 odd levels is roughly around 4.99, which is 5 lakhs. So 5 lakhs additional amount has to be kept in the account. So 30 lakhs plus 5 lakhs, roughly around 35 lakhs should be enough for execution of this strategy. Even though if Nifty falls below, then we will not have to worry. There would not be any margin call requirement or a square off of positions from your broker. So you can safely keep this until the 15th May expiry. But yes, the break even for us is going to remain as 22,900, which is roughly around 4.5% from the current spot price. So here majorly we would be gaining both from the intrinsic value as well as the time value. So as the time passes on, it is just like 4 days to expire. 15th May is the expiry. So every passing day you would see a good amount of money getting added as profits into your account. So if I quickly want to show, so this is how it represents. Let me just quickly demonstrate that for you. So how it reflects. So here, as you could see, now immediately on 12th May, suppose if we assume, okay, so now presently it shows as 2.25 lakh if it Nifty approaches 23,400 odd levels. But immediately on Monday itself, if you see, it is reduced to just 68,000, right? And as the days to expiry nears, we will see unrealized loss getting converted into unrealized profits. So this is how the strategy shows the profits, and then this can be easily executed in your trading accounts provided you have the capacity of 35 lakhs in your trading account. And then this strategy again will not require much of the adjustments needed. The adjustments would only be needed when Nifty comes near to the break even of 22,900 odd levels, or we can assume as 23,000 levels, from where we will have to start doing the adjustments. So till then we will not have to touch. And given why we are going to implement this strategy is simple, because we are anticipating positivity to come in the next week, and there are high probabilities for Nifty to move higher towards the 24,000 levels, beyond 24,000 levels, and not below. So the possibility or probability of profits in this particular trade is roughly around 93%, and 50% of the premium what we would be getting is from the time value of money, and 50% from the intrinsic value. So this is what uh, this trades you know gives us this kind of profit. So any quick questions anyone has, please put it in your um, comments, so we will answer all your queries. Now since we have good number of people have already joined live along with us, so we expect everyone to like the video if both these strategies you have understood, and you are liking these strategies and want to implement in your trading accounts too. So please do like, so that it motivates us to go further beyond and share with you all additional further strategies. And if you have not subscribed to our channel till now, do subscribe to our channel. We will also be disclosing uh, similar profitable strategies in the future for you, and based on your requirements we might also give strategies for other indices, whichever is convenient for you to trade. But since Nifty is Nifty remains quite liquid and is one of the top indexes where we will also be able to hedge or take positions from the perspective of future dates or the farthest dates. That is when we have chosen all the strategies to demonstrate today with you all from the perspective alone of Nifty. But there is no limitations for it. We can use these strategies by slightly tweaking to it based on the requirements, and implement it on the other indices too. But ensure that whatever indices that you are trading, that remains quite liquid. Only then you will be able to take positions for the future dates or the far options like the next month options or next week options or even the farthest options like June or December month options. This is only possible when you have liquidity in those particular strikes as well as the monthly expiries. If there is no liquidity, then there is no point in implementing the strategies onto those indices. So Nifty being quite liquid, that is when all our strategies today that we would be discussing will be on Nifty itself. All right, so thanks for liking and subscribing the channel. We will quickly move on to further strategies what we have planned for today. So now we will move on to next strategy. So let me just clear all these trades and then start taking the next strategy. So this is also going to be a kind of long and short straddle. So let's begin. So primarily we again will be trading on the 15th May expiry itself. So now 24,500 strike is what we are going to take on the call side, because we expect that in this 4 days of time Nifty might approach or move towards 24,500 odd levels. Okay, so we will first be buying 24,500, sorry, this is 24,500 strike. The quantities can be kept as 900, which is roughly around 12 lots, and then we will be taking sell quantity for the same strike, which will become as a short as well as long straddle for us. And here now on the put options we can take roughly around 1200 quantities, which is 16 lots. Okay, so this is how our payoff graph shows, but there is a tweak that we will have to do to this. So now we will take 23,500 strike on the call side. Okay, because we will be trading in a range. If Nifty remains in that particular range, then we will be making good amount of profit. So now here we can add to 1050 kind of trades on the call side, which will be like 14 lots. Yeah, so that's it, done. Now, so if you see on the all our 15th May expiry, so we have first taken on the call side for 24,500 strike 12 lots buy, and then 24,500 put options 16 lots sell, and then again 23,500 call options 14 lots sell. So this is how our payoff chart shows. So now if you look at this, as we told that if Nifty trades in this particular range, then we will be making decent amount of profit. So now presently Nifty is at 24,000. If Nifty goes beyond until 25,850 odd levels, that is 7.7% from the current spot price, till that price point we will be making money, and on the lower side till 23,000 450 odd levels we would still be making a good amount of money. Now the max profit that we would be expecting from this strategy is 2.02 lakhs, which is 6% on the capital deployed. Okay, and the max loss remains unlimited, both on the lower side as well as on the higher side. So the probability of profit for this particular strategy stands at 83%, which is quite decent, and the major amount of money that we would be gaining is through the intrinsic value and then time value. So we would be getting around 12.52 lakhs as premium. However, our profits will remain to the tune of roughly around 55,000 on the lower side to even if Nifty moves towards 25,000 odd levels, we would still be getting around 1.24 lakhs as profit. So each strike higher once the Nifty moves from the current position of 24,000, the higher would be profits to the tune of 22,500. So at 22,500 we will have the max profit, and then beyond 24,500 the profits will start depleting, and as we move higher towards 25,000 and above, our profits start depleting. Okay, so this is a kind of long and short strategy combined with a added additional premium, or maybe additional strike, which gives a good amount of premium to us. The major premium what we are getting is typically from this particular transactions, because this is deep in the money. So that is when we are getting 12.52 lakh as premiums. But yes, there is a decent profit that we can expect out of this strategy too. So on the higher side, until 25,848 we are covered, and on the lower side we are covered until 23,500 odd levels. Okay, now let's quickly check in case if we have any of the queries. Okay, there is something issue. Let us retry. Okay, now it is good. Okay, looks like there were some glitches. Sorry for that. But yeah, we are back now. So as you could see here, we have covered this particular strategy. So any quick questions that you have, we can quickly take it up. If not, maybe we can park all the queries about the strategies towards the end, and then cover almost all the strategies what we have planned for today. So there are good probabilities of making profits from around 70 odd thousand levels to beyond uh, you know uh, 1.5 lakhs, in case if Nifty trades in the kind of range bound scenario until 24,000 odd levels to 24,500 odd levels. We will start seeing less amount of profits only beyond 24,500 odd levels, but still the profits would only be depleting below 1 lakh after Nifty crossing 25,180 odd levels. Okay, which is roughly around 5% from the current market price. So as you could see, the expiry date profit stands at 1 lakh, even if Nifty closes somewhere at 25,200 odd levels. So the margin that is required in this account for these trades is 32 lakhs roughly, but the overall funds needed would be around 45 lakhs. The probability of profit is around 83%. So we ensure that any strategies that we implement or take, the possibility or probability of profit should at least show beyond 70%. So this strategy, all the other strategies what we have discussed till now, is above 80%. So the more the probability of profits, the better that towards the expiry, we would not be making any losses, provided if there are no abrupt movements or the range what we are anticipating based on these kind of strategies. Okay, so now we would be moving on to further strategy. So in this strategy, okay, first let us clear this. So we will take 29th May expiry, okay, to build this particular strategy. But uh, the expiry for this strategy again is going to remain 15th May itself. Okay, so 29th May we are taking only to hedge and have a proper cover. So first start with 29th May expiry. We will take strike of 25,000. Okay, so why we are doing this is that Nifty in this 4 days of expiry until 15th May should not be crossing beyond 25,000 odd levels. Okay, so let's add the lots. So let's make it 600 quantity, which is roughly around 8 lots. All right, now we will jump on to 15th May strike. Okay, and on 15th May strike, 15th May we can take 24,000 as strike, where we will be selling the call options. Let's take maybe 300. Okay, so this is how this graph looks now. So we will be adding further more positions. Let us quickly see how we should be doing those adjustments to ensure that we get a decent profit. Okay, so now the higher side is 24,300. Okay, so we will take 23,500 strike, and then we would sell roughly around 1050 quantities. Okay, so now we see altogether a different graph. Okay, now furthermore the risk is until 23,300 odd levels, 3% from here. On the higher side it is 2% until 24,500 odd levels. But since we anticipate the markets to move up, so we will try to hedge this, further. So let's take 24,500 strike. Okay, and then we will buy roughly around 5 lots, which is okay 375. Okay, so we will still be losing provided if Nifty crosses beyond 24,500. Okay, let's maybe put this on the call side. Okay, so we see even on call side there is no proper cover. Let us maybe do some adjustments further to ensure that our loss on the higher side gets restricted. Okay, so we will try to sell this, and okay, cover, we would not be needing much of the quantities. Yeah, okay, so at least this way we are covered until 24,800 odd levels. Okay, on the lower side there is definitely a risk of 2.2%. Okay, so let's see what all positions that we have taken. So first is on 29th May expiry, we have taken 600 quantities of sell call. Rather, uh, let's make it put and see how this position gets adjusted. And here maybe we will, okay, so we have sold 25,000 put options for 25,000 strike, fine, for 29th May. And then we have taken 15th May 24,000 strike, call option 4 lots, fine. So again 15th May 23,500 put options for 1050 quantity. Do we have to keep this, or let's reduce and see? Okay, it is better to keep 15, sorry, 14 quantities itself, and then 24,500 call option buy. Okay, fine. So on the lower side, the risk remains little bit high because just from the current level, it is 1.5% below. But considering the fact that we are anticipating the markets to move on the higher side from these levels, that is when we are not covering much on the lower end, rather good amount of hedge or consideration is given on the long side. So on the long side, if you see, we are covering roughly around 5.4% from the current levels, which is 25,305 odd levels. There are with the good news that we have in the offing, like one, the free trade agreement with UK, that is completed last week, and then yesterday we got the news on the ceasefire between the existing war that got initiated between India and Pakistan. So that would get stopped from tomorrow. So if that continues, then we will swiftly be expecting Nifty to move on the higher side. So if that happens, we have to ensure that there is low or limited risk on the lower end. That is when, with small hedge on the lower side is also okay. But on the higher side, once it moves, you should not lose primarily one. Second, in fact, with the higher movement, you should also be flowing with the market and should gain the returns. Okay, so that is when we have taken positions which gives us maximum profit as the market moves on the higher side. Okay, so the max profit you see at around 24,500 odd levels is where we will see roughly around 2.95 lakhs being made, and this is the precise level what we are anticipating Nifty to close at on 15th May expiry. So 29th May trade is just for the hedge and to cover for a long range. So the probability of profit for this trade is 75%. Compared to the previous strategies, this is a bit low. On the um premiums, so in total we are going to collect 2.738 lakh premiums. However, the max profit for us is only going to be around 2.95 lakhs. Okay, so the margin needed for this is again huge, roughly around 41 lakhs, and then funds needed is roughly around 49 lakhs. Okay, so you have to ensure that you keep at least 2.5 lakhs extra, uh, which is roughly around 50 odd lakhs plus, because 8 lakhs of premium you would be getting here. So another 2 lakhs if you maintain as margin, that should be sufficient for this trade to carry on until the expiry. So overall, since we have the call positions being taken on both calls and puts position being taken on all these kind of strikes, that is when uh, the margin requirement is also high, and since we are taking in the money positions for a few of the legs or trades, that is when the margin that we are expecting to get is 7.83 lakhs. So if we do the bifurcation of this 7.83 lakhs, major amount of money is the intrinsic value uh, because of the deep down strikes, and the rest is the time value, so which is what we would be capitalizing majorly on. Okay, so the net profit for us is going to remain 2.95 lakhs at the median, or maybe uh, 24,500 odd strike. So overall, this strategy also covers the higher side risk to the tune of 5.4%, which is quite decent. Now then we will move on to another further strategy. So meanwhile, if you have any questions or doubts, put it across in the live chat. So we will go through all your queries and accordingly revert it back or directly discuss in this particular call so that all your queries could be resolved. So meanwhile, as of now, we are done with the um, four strategies. So we expect that these strategies are surely going to be quite beneficial for you in this high VIX. So we have to capitalize this high VIX opportunity into profitable trades, and writing is the only option through which you will be able to capitalize this high premium opportunities. So that is when you see in all our strategies, four strategies what we have discussed, the majority of the positions what we have taken is on the writing side, that is sell options. Here if you could see. Okay, so hoping that this live demo is helping you out, and you can also plan the trades the way how we have planned and made profits. So if you want to take a look at our past trades, so we have uploaded few of the shorts based on the weekly expiry trades what we had taken both on Nifty as well as other indices like Sensex. So just take a look at those. You will be able to understand the potential of today's um, live session of disclosing the top trading strategies, or you can call as option strategies, which will help you to mint money on weekly basis. So we have been doing the same and smartly executing these strategies along with the risk adjustments wherever it is needed, and we have been decently able to make profits, which is quite evident to you now based on the live positions or the short videos that we have updated. Those are directly from the terminals or the broker tools where the positions are all live. So looking at those videos, you will surely get confidence with the kind of potential markets hold and the kind of opportunity it has, provided you are willing to learn and then spend time in exploring a lot of new strategies or the change in the business environment where all you would be required to make necessary changes. So trading is not just the maths or the numbers. Trading is less of your maths or numbers and more of your intelligence as well as emotional quotient. Okay, so if you are not emotionally fit, trading is not for you, trust me. You have to be unbiased with trading. You have to be holistic with your approaches. You have to ensure that you take stiff decisions and make yourself more adaptable as and when there are changes in the market, and accordingly you will have to make those necessary moves to ensure that you do not turn into losses. So this traditional civilization or maybe culture what we had in terms of following the dates, so those thing even maybe you should follow it because it would definitely be helpful for you um, in terms of planning your trades effectively. So now we will quickly move on to another strategy. So let us clear the trades. Now let's take for the next week expiry. Okay, so this is going to be a kind of strangle trade. Okay, where we would take the sell positions 23,000. Why 23,000? Simply because we do not anticipate markets to fall below 23,000 on 22nd expiry. So that is when we are first selling roughly around, let's take 1050 quantities or 14 lots. Then we will move on to 23,500 odd strike, and this is on the call side. Okay, we will take one third, sorry, around 1050. Okay, two-third kind of positions, which is decent enough. So now we are covering major the down, you know, downward expectation. But what if Nifty moves on the higher side? Then we will have losses, right? So beyond 24,400 odd levels, we would be seeing we make losses. So what adjustments do we have to do here? So let's quickly move on to June. Okay, on June we will do the buying. Okay, roughly around 25,000 strike. Okay, let's see if kind of 10 lots should be sufficient. Okay, now our loss starts from 24,440. Okay, so we will take now December expiry, 25,000 strike. Again we will buy, and here we will buy more quantities around 900. Okay, so why these kind of trades again? Okay, so this is 22nd May expiry. Okay, not the upcoming expiry 15th. So now since we have a long range, we have long number of days, that is roughly around 9 trading days. Okay, and we also have um, here the long range. On the higher side, typically there is unlimited profit in this particular strategy. The more Nifty moves higher beyond maybe like 24,500 odd levels, the more we will start seeing decent profit getting added uh, in this particular strategy. See, the more the FIIs, DIIs, and the overall institutions as well as retail traders remain positive, uh, Nifty is expected to move on the higher levels. Okay, so net on the break even, if we look, 23,000 is the break even, which shows us 4.4% down from the current scenario, which is quite decent. If we close on the expiry towards 23,500 on the lower end, 2.81 lakh is the maximum profit that we will be entitled. Now if we move on the higher end, okay, but we are closing the expiry towards 24,500, assume, then in this case there is a good amount of profits that would get eaten up because of the hedges what we have taken in the June as well as December month expiry. Okay, so now if you see until that level of 24,500 there is a decent profit. Immediately after that, once we cross, we will be seeing potential increase in the profits that happens. So even at this level, 24,500 odd level, the maximum profits that we are entitled is 1.82 lakhs, which is quite decent, and um, on a margin of roughly around 30 lakhs, it is quite decent, of roughly 1.5 to 2% odd. Okay, but the problem with this particular trade is only that we are paying premiums. Okay, now if on the uh, coming weeks until 22nd May, if the premiums erode, okay, because of crashing of VIX, then we will see a huge impact of positions on Nifty for 26th and 26 June and 24th December. Because of the high weeks, the premiums also would be higher to 8 to 10%. Okay, so once premium gets eroded on Monday or maybe subsequently on Tuesday, you will see that the premiums would collapse uh, at these levels, and that is when, because of low premium, we might also see some losses be shown if the VIX falls much below the anticipated rates of 15, assuming, then we will have some losses getting reflected. Not sure though, but yes, we'll have to see. So net premium, net intrinsic value is 3.73 lakh, and the target value is roughly around 9 lakhs. So the difference of this is what we have got as premiums. Okay. So in this particular strategy, the profit remains unlimited, but the loss, is also unlimited. And our losses will start if Nifty starts trading below 23,000, 22,950 odd levels. Okay. So again, the probability of profit on this particular trade is 85%, which is quite positive. And these kind of percentages or the analysis definitely helps the market participants to closely monitor and check the trades accordingly. So in this strategy also, there would not be any need of making any adjustments. The adjustments would only be needed at 23,000 odd levels. Until then, we need not to worry in this strategy. We hope you are able to understand and it is clear for you as to how we frame the best of the strategies during high weeks, which will definitely help us to capitalize on good profits. And you have previously been seeing, if you have been, subscribed to our channel, we have updated the short videos of the, profitable days for the last two expiries, because we have been taking similar such trades very meticulously to gain profits. Of late we have also started doing analysis and study onto our strategies, typically for in the money options, both on the calls as well as put side, because during the high VIX kind of scenario, we will be significantly seeing the premiums getting bulged. So once that happens, it will give decent profits to you. If there is no significant movement that is seen on the indices. So from the last almost 2 weeks, we can say Nifty is particularly hovering in this range. Okay, in this range of 24,500 and the lower range of 23,900 odd levels. So it is like a box that Nifty has made. So once we move beyond these levels, then we will be seeing significant uptick on the higher side beyond 24,500 odd levels. Similarly, on the lower side, 23,800 remains crucial, and then we will immediately have to square off the positions, provided on the charts it is very evident and clear that Nifty do not take this support of 23,000 700 odd levels. Okay, so now if we move on the graph, P of graph, so on the lower end, yeah, so 23,800 what we discussed, right? So at this level, once Nifty comes, then it signals that there is some negativity or pessimism in the markets, and we might start drifting towards the lower end. So the area where we again would be having the maximum profit is around 23,500 odd levels, because of the sell call positions of 10 lots that we have taken at the higher premium. So this, since this is in the money, um, that is when the premiums are high, and we would be capitalizing the premiums by selling this. Okay, So at 23,500 odd levels, again we would be getting 2.8 lakhs of overall profit. So both on the lower side we are much covered, and on the higher side, of course, there is nothing we will have to worry. In fact, it would be a lot of positive if we capitalize on these kind of trades, and there is a significant reversal that would be seen in the Nifty. So this is one such kind of strategy or trade which will surely help you to get decent profits in just 2 to 3 weekly expiries or sessions. So if you are finding our strategies really beneficial and helpful, do like the video, and subscribe to our channel in case you have been visiting for the first time to this particular channel. So hoping that you have understood how we take the trades. So this is the last you know bonanza kind of strategy that we would be sharing with you. So let's start again with maybe let us clear all these trades. We will start again with 22nd May as an expiry. Okay, so we will be taking 23,100 strike, sell positions around 1500 quantity. So what this suggests is that we are uh, you know not bearish in the markets, and we do not expect Nifty to cross towards the range of 23,000 odd levels. But still we wanted to ensure that we take trades which will not just maximize our profits, but maximize our potentiality to reduce or manage our risks at the early stage. Okay, so now let's take 24,000 strike, again same expiry. 24,000 strike is here, so we will sell maybe 750 lots here. Let us quickly check how the graph shows. Okay, so graph shows this way. Now let's do 24,000, right? So 24,500 instead of maybe on the put side, we will take on the call side, but this time around it will be a buy trade, so that at the higher level, once Nifty moves, we shouldn't be facing any losses. So okay, so somewhere here we have the loss, right? We are incurring some loss. If we execute this, then what we will do is we will take next or maybe last monthly expiry 24,500 strike, and then we will buy, since the premiums are also on the higher side in case if Nifty actually moves on the higher end. So this would largely benefit us. Okay, so now if you see, uh, so there is like of a fixed returns that we would be getting, a sliding kind of fixed returns that we would be getting, provided if Nifty approaches or closes above 23,000 odd levels. Okay, on the higher side there is unlimited profit, and also loss remains unlimited beyond 23,000. Else we are quite well covered. So if at the strike itself we close, then max profit of 2.39 lakhs is what you would be in a position to gain. Assuming if Nifty moves towards 23,100 odd levels, still you will gain roughly around 1.46 lakhs. Now let's see from the perspective of higher side. So because we are taking this call option uh, as buy, so that would significantly add our positions to profitable when Nifty significantly moves up. So assuming if Nifty moves towards 25,000 in 4 days, then the max profit on the expiry day for us is going to remain as 2.71 lakh contracts, which is quite huge. So in majority of the transactions or trade demonstrations, if you see, the maximum profits for us is beyond 50,000 odd levels, which is very very normal and maybe perfect kind of trades where we do not have higher risk, because we are trading in one of the range bound, and immediately once we see the range is getting broken out, we will do the adjustments, cut down our positions on shorts in case if market moves up, and cut down positions on longs in case if market is going on a downward trajectory. So there would be surely couple of things that you will have to take care of it. Not just learning strategies would help, rather executing those rigorously, seeing multiple kind of scenarios, be it low wicks, high wicks, all this has to be taken a look at it before you place any of the orders. Okay. So as far as our trades are concerned, we definitely believe that the core idea to discuss with you all today is that whatever strategies that we are implementing, you can also implement it quite seamlessly and then earn profits. So the expectation is you should be aiming for profits to the tune of 1 lakh and above as your weekly gains in the capital of 30 to 40 lakhs, so that throughout the month you will be in a position to gain roughly around 8 to 10% of profits, which is quite significant given the kind of high VIX scenario. So yes, you will have to strategically combine these approaches, what we have demonstrated today, and then improve your understanding on the nuances of the market, like how it behaves in the low VIX scenario, high VIX scenario. uh, Now if you would have been observing, despite the VIX is high, we are not expecting any volatility to come in the markets, right? So from almost a week's time, Nifty has traded range bound. Okay, and this very evidently shows that there is a premium capture or eating being happening by the FIIs or maybe market operators in this high VIX kind of scenario. So like us, even you can learn how these strategies work now that we have openly disclosed what all trades that you have to take in and then implement these strategies on your side too. So we would say that's it for this particular live video. So we do not see much of the queries being raised, but we will continue to answer all your queries in future too. Just ensure that you put all your questions in the comments column, so that we will go through one by one and either reply to you with the answers, or maybe will disclose few of the key critical aspects that every individual has to look upon who enters into the trading session, or maybe trading kind of markets. So yeah, uh, that's it we have for today. So what we have discussed is uh, glimpse of option strategies that could potentially give you good returns. For us, all these strategies have been helping us to get profits to the tune of 1 lakh and above on weekly basis. But yes, these strategies are not something to be blindly implemented for. You will have to monitor the markets, take necessary adjustments or changes in the trades immediately once you see market moving out of certain zones, or either breaking out or breaking down. So during those kind of scenarios, you will have to ultimately take the necessary actions to adjust all your positions to further ensure that you remain in a profitable trade despite changes, despite making those changes in your present trades. let us also make certain disclaimers very clearly. We want to be absolutely clear from our side that options trading definitely involves significant risk, and there are no guarantees of profits. Meaning to say, if it stays in that particular range or based on our strategy, pricing break evens till those range, if it stays, you will gain profits. But no one knows if where Nifty is expected to open tomorrow or close tomorrow, right? It could uh, open gap up, gap down based on certain specific results and all, and that would definitely deter if you do not have proper hedges taken on all your options positions. So we have shared the examples and ideas today, and all these are only for educational purposes and should not be taken as the financial advice. So let's ensure that you will immediately not starting to gain profits, maybe because you have been doing a copy trading from our side, or maybe looking at those positions and you executing your trades. uh, you know uh, that doesn't mean it is not risky. It is definitely risky, and there is no assurance or guarantee that you might continue to have this high week scenario for a longer period of time, or you will have similar such scenarios or premiums available in the future date too. Okay, so that is when all these today's examples are for educational purposes alone. So, and do not rush that every week you have to get similar kind of profits, because achieving consistent high returns definitely requires a deep understanding of the markets, disciplined execution, both entry as well as exit, and then the robust risk management. That what if your trades go negative, because of some severe reasons, and then there are no possibilities for it recovering back, maybe in few hours to a day's time, right? So during such kind of scenarios it would be very challenging. That is when what we do as a kind of risk to reward kind of adjustments before going on maybe long leaves, or market being closed for a uh, working days. So we ensure that we hedge our positions just before the market close, and we close those positions the next day itself if there is no huge gap up or gap down movements that are seen. So this way our portfolios are quite hedged because of the volatility uh, you know uh, during the markets when it is closed, right? Or maybe after the trading hours, any news can significantly have impact onto the Nifty's movement, right? So that is when we ensure that our positions are hedged just before closing the markets, and we maybe execute those trades again further back the next day, in case if we do not see much of the movements of gap up and gap down, so that we could easily eat up on the premiums. So ensure that uh, you take due care and diligence of all your trades. Achieving consistent high returns definitely is not easy, provided you are not disciplined in your education and you do not follow the robust risk management practices. So now that we have very clearly disclosed the strategies in this particular trading session, before implementing of these strategies with your real money, it is crucial that you thoroughly understand the risks involved. If you are not so confident about yourself on these trades, then do paper trade extensively to gain experience first in the options market, and then the good idea would be to start with the small capital, so that if anything goes wrong, you can afford to lose that small capital alone. In case if you will have big capital, in a one go you will be losing out. and since you do not hold those necessary skill sets, it becomes quite difficult for you to capitalize the opportunity and then get back your lost amount. Okay, so that is very, very crucial. And lastly, ensure that you consult with your financial advisors before taking any positions on the options market, because this is a high risk instrument. So if you are serious about exploring the further potential of options trading and overall strategies what we had discussed, and if you want to learn more advanced techniques and risk management practices, then make sure that you like this video and subscribe to our channel for more in-depth content as well as similar strategies on other indices too. So hit the notification bell in case if you are coming first on this channel. Your likes and subscribe would definitely bring a lot of positivity and motivation to us, so that we can do a good job further for you by demonstrating similar such kind of unique kind of trading practices or strategies that we have been following. So do not miss our future insights, and always keep checking on our daily market vision series videos for understanding the market prediction on Nifty, FINNIFTY, Bank Nifty, as well as Sensex indices. So that's it for today. Thank you all for staying with us in this live session, and thanks for all your queries. We will surely answer those maybe in our upcoming video or in the chart itself, so that you can be clear with your thoughts before you jump into the options trading. So thanks once again. Until then, happy trading.